All right, high, and higher. All right, that's what it is. How high will they go? Interest rates, interest rates, interest rates. We've been talking about this for a couple years now with respect to the fact that interest rates are most likely going to stay higher for longer. And we saw, if you look at the inflation data that came out 2 weeks ago, 4.2% versus the expected 3.8, and then core inflation at 2.9%. So again, that moving up definitely responded up, and you saw the bond market on the 10-year Treasury jump, another 20 basis points. So you've got a couple of factors going on: the war in Iran, the energy costs, all these things happening. But again, you're really in an environment where interest rates are up, just as we've said, and are likely to stay higher for longer. So what does that mean? It means, a lot of the stuff that we've seen, with deals that have come through or social media or different things like that, they're banking on interest rates going down. And I would suggest to you right now, we don't have an environment where there's a lot of data that says, hey, interest rates are going down. It's more likely that we've found a more channel of new normal, as we've been talking about. So again, before this all took place, it was tracking down a little bit on inflation. That's been reversed now. Kevin Warsh, who's the new Fed, for sure, he's come in. He's communicating that he's not going to be as vocal, but he is going to follow and do the right things. And so ultimately, it looks like they are in a position where they may have to bump interest rates up if inflation stays a little sticky because of the energy cost and the things that have occurred. So what does that mean for you and I? It means that you have to be more discriminating, taking a look at what's going on, what the deals look like. And again, in a real way, I was just talking about this with some private equity folks. It's like, if interest rates were to tick up in the next 2 to 3 years, you have to be able to factor that in on deals that you're looking at. So again, there definitely are distressed opportunities that are coming into the market, and they present opportunities to buy at a basis where the yield, meaning the cash on cash return, presents a good opportunity. The other area we've seen is in the single family residential, that's not so interest sensitive as it is on commercial, that is really starting to come into play as well, because again, the softness in the market. So there's still opportunities that exist in the real estate space, no doubt, but again, they have to be looked at in a manner with an intelligent, discriminating eye, recognizing that we're not going to return to a lower interest rate environment anytime soon, at least based on the data that's on the horizon. So, with that, you take that into account, as we've been saying for the last 2 years. There's guys I've seen, and I know that they bought deals last year based on the fact that interest rates are going to come down in the next 18 to 24 months, and that's really not going to happen. And so again, you want to be discriminating and looking at that. And again, it doesn't mean that real estate is out of favor. It just means that you have to be more thorough, more looking, really digging deep to find the deals that make the most sense. And so that's the ticket. That's what we're looking at. And just wanted to shoot this as a quick update. So you have a blessed and victorious week, for this is the week God has ordained for you.